Tesla's CEO Elon Musk once said that Tesla will be the most valuable company on Earth. While this is yet to happen, Tesla is indeed creating a path to reach this milestone. Currently trading below $180.45, it's only a matter of time before Tesla stock crosses the $200 threshold and probably gets to $400 per share before the end of this month. Stating how this will happen, Director of Research at ARK Invest, Brett Winton, has said that Tesla is up for a massive run in 2023. According to him, EVs will dominate the market in the next 5 years, and in 2027, there will be around 60 million electric vehicles sold, with Tesla producing a large percentage of this figure. Hello everyone, and welcome back to Tesla Tomorrow. Tesla's demand has been pretty incredible in the last couple of weeks, and while there have been fears of a possible decline in the demand for Tesla cars, things seem to be changing, and it is almost certain that demand will continue to increase in the coming months. Following the release of Tesla's Q4 production and delivery numbers, several analysts claim that the decline in the demand for Tesla cars is becoming even more evident. In the fourth quarter of 2022, Tesla produced over 439,000 vehicles and delivered around 405,000 of these. According to the car company, vehicle deliveries grew from 40% year over year to 1.3 million, while production grew from 47% year over year to 1.37 million. Tesla had a record-breaking Q4 despite a drop in production at its Shanghai factory in China, although some analysts claim that these figures were below Wall Street's expectation of around 427,000 deliveries for the final quarter of the year. The car company suspended production at its Shanghai plant in December, according to an internal notice, bringing ahead a previous plan to pause most work at the plant in the last week of the year. With the delay in production, several Tesla investors had expected a significant decline in the company's delivery numbers, but instead, Tesla performed even better. According to Brett Winton, Tesla's Q4 numbers are record-breaking. He added that with higher production rates in the next quarters, this could spur the stock price to go as high as $400 this year. Why has Brett Winton said this? Let's find out. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Recent reports from Tesla's Investor Day have revealed that the Cybertruck could be coming sooner than expected. Tesla intends to follow Elon Musk's vision to the letter, where first deliveries of the truck will happen in the third quarter, with around 1,000 deliveries this year. Volume production is also expected to start next year. Tesla has recorded enormous demands for its EVs in the past years, and although there is a fast transition from ICE cars to electric vehicles, which have increased Tesla's EV markets, some analysts still believe that demand for these cars is slowly declining. Morgan Stanley analyst Adam Jonas stated sometime last year that Tesla is very likely to be experiencing demand destruction. This analyst reduced his base case price target for Tesla stock from $383 to $350, stating that the drop in the demand for Tesla cars will be reflected in shorter lead times and price declines in the following months. While there are indicators that Tesla has good demand, there are also certain factors that may cause doubts, such as wait time for Tesla EVs in some of its markets. Tesla has had drops in wait times for deliveries on new orders for some of its electric vehicle models, and some analysts believe that this may indicate a drop in demand. On the other hand, New Street Research managing partner Pierre Ferragu stated at an event held by Tesla in its Berlin Gigafactory in August that he sees Tesla facing unprecedented demand in the future. According to him, demand is way above what hopes were a few years ago, and electric cars are becoming so popular that for Tesla and its competitors, market shares will most likely be dictated by their ability to ramp up car volumes. Although Tesla's car prices have gone up in the last 2 years, the automaker recently started slashing the prices of some of its cars. According to reports, Tesla slashed prices for some of its EVs in China, with price cuts of up to 13% for some models. Reports from the local media in China revealed that Tesla had received 30,000 orders within 3 days after it announced these price cuts, as several EV buyers seized the opportunity to order a Tesla EV for themselves. However, although these price cuts have been quite beneficial for Tesla and set the path for robust revenue generation this year, it somehow supports the claim that Tesla was in fact facing issues with demands. According to some analysts, Tesla's price cut came in the face of perceived signs of faltering demand, intensifying competition in the world's largest auto market, and at a time when the automaker is struggling to maintain its sales in China, which is its biggest international market. There's also one other thing to consider, which is the possibility that Elon Musk may be selling Tesla shares again. The Tesla and Twitter CEO recently discussed that he is open to buying Silicon Valley Bank, which collapsed recently. Musk disclosed this in his response to a suggestion made by CEO of Razer, Min-Lian Tan, that Twitter should buy SVB and become a digital bank. Head of branding at Bocchio, Michael Paolo, also supported the idea, stating that Twitter could use a financial leg. According to him, it would make total sense for the entire Elon Musk ecosystem to buy the ruins of SVB and could also create a viable business model going forward for Twitter. Twitter has been applying for regulatory licenses and creating software to introduce payments on the platform. Therefore, an acquisition of SVB could presumably help with this. However, while this may be a very good idea, not everyone is thrilled with the idea of Musk having another distraction. Tesla investors have been frustrated with Musk's focus on Twitter, and another distraction may not be welcomed. Musk sold billions worth of Tesla stock to help finance his takeover of Twitter and has been preoccupied with reshaping the platform. The Tesla CEO sold stock worth $8.5 billion in April, $6.9 billion in August, $3.95 billion in November, and $3.6 billion in December, totaling almost $23 billion. The series of Tesla stock sales made last year by Elon Musk heavily depressed the share price, and now Musk may be risking another drop in Tesla share price if he sells any more Tesla shares to fund his new project. Likewise, he may be adding even more distractions than there already is if he eventually buys the bank. Whether Elon Musk will make any move towards purchasing this bank, no one knows. But what most Tesla investors can say for sure is that Tesla is most likely going to have a good run this year, especially since electric vehicles are becoming more popular. According to Brett Winton, Tesla is at least 3 to 4 years ahead of the industry in driving transition to EV, and the car company will continue to drive down cost as they increase production. They are also going to be releasing new models and products in subsequent years, so that in the near future, Tesla will be able to sell every car and product that it manufactures. Winton believes that if Tesla successfully produces its low-cost EV, it will once again set the standard for the EV market, just as it has done with its previous models. The Tesla bull had previously given his take on innovation and how this can be a massive edge for companies. He has pointed towards the similarities between current innovations and emerging market investments. There is a lot to expect from Tesla in the coming years, particularly in terms of innovation and autonomy, and these could potentially increase the car company's demand and, in the long run, its stock price. The automaker recently launched the Supercharger V4, which is the latest generation of its popular DC fast-charging station. Tesla opened its first V4 superchargers in Europe, kicking off the newest version of its charging network in Harderwijk, Netherlands. Although details regarding charging speed, cable length, and others have not officially been detailed by Tesla, this new Tesla supercharger has been said to have the potential to be twice as powerful as the previous generation. What other Tesla innovation are you looking forward to? Let us know in the comments section, and don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.